Good morning, everyone, and happy Wednesday. It is Julie here with your TipRanks pre-market morning update, where we're bringing you everything you need to know before the market opens. So let's get into it. Alright guys, welcome back and thank you all so much for being here. This morning we'll be taking a look at exciting stock market news, notable earnings reports, and the morning's biggest gainers and losers. Don't forget to head over to TipRanks TV to check out some fantastic exclusive series, including our after hours market recap, and check out the perks of the ultimate and premium subscriptions while you're there to give you that extra edge with your investment research. Now let's get right into this morning's exciting stock market news. U.S. stock futures are in the red this morning. Currently, Dow futures are down 0.51%, S&P 500 futures are down 0.65%, and NASDAQ futures are down 0.92%. Twitter said they will hold Elon Musk to his $44 billion offer to purchase the company. This comes after Elon said the deal could not move forward until Twitter provided proof on their spam bot rates. Earlier this week, Musk had said that the deal was on hold until they gave more information about their fake accounts. Their CEO then published a detailed thread on how the company estimates their bot accounts, which Musk responded with a poop emoji. In a filing with the SEC, Twitter said that the company is committed to completing the transaction on the agreed price and terms as promptly as practicable. Analysts currently rate the Twitter stock a hold with an average upside of about 35%. Streaming giant Netflix is laying off about 150 employees as they look to cut costs. In a statement, they said, "Our slowing revenue growth means we're also having to slow our cost growth as a company. So sadly, we are letting around 150 employees go today, mostly US-based. These changes are primarily driven by business needs rather than individual performance." With over 11,000 full-time staff, the cut amounts to slightly more than 1%. The stock is currently rated a hold with an average upside of 57%. Today, Boeing is launching a test of their Starliner, the reusable space capsule. The launch, which is scheduled for just before 7 p.m. Eastern Time tonight, weather permitting, will be their orbital test number 2. Starliner is designed to carry up to 7 passengers or cargo to low Earth orbit and back. Boeing says it is designed to be reused up to 10 times and has an innovative weldless structure. Analysts rate the Boeing stock a strong buy with an average upside of 68%. And semiconductor companies Advanced Micro Devices and Qualcomm have entered into a partnership. The collaboration will bring Qualcomm's Fast Connect 6900 system to AMD's Ryzen processor-powered business laptops, which will enable the Wi-Fi 6 and 6E bands to outperform traditional single-band connections for improved video conferencing experiences, reduced latency, and enhanced connection robustness. The AMD stock is currently rated a moderate buy with an average upside of 30%. While the Qualcomm stock is rated a moderate buy with an average upside just over 37%. Now moving over to notable earnings reports. In the pre-market this morning, we'll be hearing from Zim Integrated Shipping, Analog Devices, and TJX companies. And in the after hours, we'll be hearing from Cisco Systems, Synopsys, and Bath & Body Works. Already this morning, we heard from Target. Their stock is falling after the company experienced supply chain issues and a rise in costs that affected their profits. Target reported earnings per share of $2.19. This fell short of the $3.07 expected. Revenue did come in ahead of expectations slightly at $25.17 billion versus the $24.49 billion expected. Their CEO said that the company missed the mark as its gains were accompanied by unusually high costs. He said on a call with reporters that while we saw healthy top-line growth in the quarter, we were less profitable than we expected to be or intend to be over time. Analysts currently rate the Target stock a strong buy with an average upside of 29%. Reporting better than expected results and affirming their 2022 guidance was home improvement retailer Lowe's. Lowe's reported earnings per share of $3.51 ahead of the Wall Street estimates of $3.22. They reported net earnings of $2.3 billion. They also affirmed their outlook for 2022 revenue of $97 to $99 billion and earnings of $13.10 to $13.60 per share. Analysts currently rate the Lowe's stock a strong buy with an average upside of over 27%. Now let's take a look at which stocks are this morning's biggest gainers and losers. Our biggest gainers this morning are led by dLocal after they showed big year-over-year growth in their earnings report. Under the ticker DLO, the stock is currently up 12.5%. They're followed by Insmed under the ticker INSM, up about 7%, and Golar LNG under the ticker GLNG, up just over 6%. Our biggest losers this morning are led by Target following their earnings miss. Under the ticker TGT, their stock is down 22%. They're followed by Doximity under DOCS, down nearly 14%, and Dick's Sporting Goods under DKS, down 8.5%. So that is going to be everything for Wednesday's pre-market morning update, getting you up to speed with what you need to know before that opening bell. If you made it to the end of today's video, make sure you hit that thumbs up button and that you're subscribed to the channel as well. Thank you guys so much for watching. I hope you have a fantastic day, and I'll see you back here next time.